stock market crash can have a devastating impact on people's finances, wiping out years of savings in a matter of days. That's why it's crucial to be prepared. Today, we're going to explore how you can predict a stock market crash before it happens. Welcome back to the Wealth Watch. Predicting stock market crash is a vital skill for investors and anyone concerned about their financial future. While it may seem like an impossible task, there are indicators and signals that can help you foresee potential downturns. In this video, we'll discuss these indicators and provide you with strategies to stay ahead of the curve. Understanding the signs of an impending crash can help you take proactive steps to protect your investments and minimize losses. Let's dive into the complexities of predicting stock market crash. The problem with stock market crash is their unpredictability. Market fluctuations can be influenced by countless factors, making it difficult to foresee a crash with absolute certainty. However, being aware of the challenges and understanding the difficulty can motivate you to look for patterns and signals that often precede a downturn. The key is to stay informed and vigilant, continuously monitoring the market for signs of trouble. While no one can predict the future with 100% accuracy, there are indicators that can give you a heads up before a crash occurs. If you're ready to start your investment journey, now is the perfect time to join Robinhood. By signing up using the link in the description below, you'll not only get access to commission-free trading and a user-friendly platform, but you'll also help support this channel. Plus, Robinhood offers a referral bonus when you sign up and fund your account. You can earn up to $200. It's a win-win situation. So, click the link, fund your account today, and take control of your financial future. Let's discuss some key indicators and signals that can help predict a stock market crash. Economic data. Keep an eye on key economic indicators such as GDP growth, unemployment rates, and inflation. A sudden deterioration in these metrics can signal an impending downturn. For example, a significant drop in GDP or a sharp increase in unemployment can indicate underlying economic issues that might lead to a market crash. Market trends. Look for patterns in stock market performance, such as prolonged periods of overvaluation or a series of declining sessions. These trends can often precede a major correction. If you notice the market reaching new highs without substantial economic support, it might be a sign that a correction is imminent. Investor sentiment. Monitor investor sentiment through surveys and market behavior. Extreme levels of bullishness or bearishness can be a contrarian indicator. When everyone is overly optimistic and buying aggressively, it can create a bubble that's prone to bursting. Conversely, extreme pessimism might indicate a market bottom. Now, let's reveal some lesser-known but effective methods for predicting stock market crash. Market volatility. High levels of market volatility, measured by indices like the VIX Volatility Index, can indicate increased risk and potential for a crash. Spikes in the VIX often precede major market downturns, as they reflect heightened uncertainty and fear among investors. Historical patterns. Analyzing historical patterns and cycles can provide insights into future market behavior. Markets often move in cycles, and studying past crashes can help identify similar conditions today. By understanding the conditions that led to previous crashes, you can better anticipate when similar patterns are emerging. To recap, predicting stock market crash requires a combination of monitoring economic data, market trends, and investor sentiment. Additionally, paying attention to market volatility and historical patterns can provide valuable insights. While predicting crash with absolute certainty is impossible, being proactive and informed can help you minimize risks and protect your investments. Remember, the goal is not to panic but to stay prepared and make informed decisions based on the available data. What strategies do you use to predict stock market crash? Share your thoughts and success stories in the comments below. And if you enjoyed this video and want more financial tips, don't forget to like, share, and subscribe to our channel. Hit the bell icon to stay updated with our latest content. Thanks for watching, and see you next time.